Hi everyone, welcome back. I'm Ira, and today we're going to talk about what factors one needs to think about when making investment decisions as an investor. Different investors may have different investment theses, depending on which some of the factors we discuss in this video may hold more value to some than to others, and some might even consider factors that we aren't talking about today, while some others may not consider any of the factors in this video. Investing in a startup is risky as well as rewarding. In this video, I'm going to run you through a series of 10 pointers to keep in mind when investing in a startup. Number 1, founding team. Founder fit is crucial to startup success, and so, as an investor, evaluating and judging the skill sets and abilities of the founding team are imperative considerations. I would suggest following the 3 C's approach: competency, commitment, and comprehensiveness. Number 2, sector. Investing in a sector in which you have experience might help better monetize the opportunity and help the business grow. But if you're looking to diversify risk, investing in varied sectors is only natural. Number 3, market size. This is by far one of the most important factors to keep in mind. As an investor, being able to identify businesses with room for value growth as opposed to lifestyle businesses is imperative to making sound startup investments. Number 4, the X factor. The X factor is essentially the USP or unique selling point of the business. When thinking in terms of a USP, it is crucial to think along the lines of a competitive advantage that has barriers to entry. When thinking about barriers to entry, don't forget to consider intellectual property rights, as these can be real game changers. Number 5, unit economics. All investors scrutinize the unit economics and monetization model of the startup in the preliminary stage itself. The scalability of the model needs to be evaluated, as there is no point putting your money into a startup that does not have a plan for monetization and future financial stability. Number 6, timing. Getting into the market at the right time can make or break a venture. Research the market that the startup is looking to penetrate. Evaluating the market opportunity in terms of timing while keeping the competitive landscape as a contributing factor in mind will help examine the success potential of the startup's value proposition. Number 7, fact check. The investor pitch deck usually covers the unit economics and financials of the business. For the sake of being thorough and sure, a cross-examination of these points can go a long way to reduce investment risk. Number 8, payout period. Another important filter is the likely period until a payout. Various investors may have varied preferences in this regard, but it is a common factor to be considered in investment decision making. Number 9, use of funds. It is good to find out what the funds will be used for. Usage of funds towards personal debt and other diversions are usually red flags from an investor perspective. The utilization of funds towards scaling and achieving milestones that will boost entity value in the future act as green signals for investments. Number 10, cap table. Last but not the least, as an investor, you must make sure that the cap table is such that the founder has enough motivation or incentive to sustain performance. So those are our 10 pointers, and I will see you in the next video.